Now, you've probably heard of support and resistance levels, and maybe you even use them in your strategy. But have you ever been aware of where those levels actually are? This brings the whole topic of psychological levels. And in today's video, you'll learn exactly what they are and how to use them as support and resistance levels. You ready? Let's go. All right, ladies and gentlemen, psychological levels, also known as bank levels, institutional levels, also related to the quarters theory, a lot of the same thing. Now, as I said before, we know how powerful support and resistance is, but sometimes we may not be fully aware of where these levels actually are. Of course, you're going to see one high and you're going to draw a box from one high to the next high, and you're going to draw a box from one low to the next low. But are we aware of around where those price points are that we are actually drawing those levels of support and resistance? Now, when we talk about psychological levels, it's very important to note that we are talking about whole numbers. So for instance, we are on GJ right now. If we're talking about major levels as we look here on GJ, talking about 150, 160, 170, etc., these ranges have about 1,000 pips in between them. Now, in between these ranges, we can break this down even more into 100 pip levels. These are smaller levels that still end up being very significant when we talk about support and resistance. Also, further than that, but not on the chart just yet, are quarter point levels. And the quarters theory breaks these levels down into 4 quarters. So that will be 152.5, 155, 157.5, and then finally 160. I hope you understand the trend here. So you're breaking it down into those quarters, 25 cents, 50 cents, 75 cents, $1. Now, when you set those levels on your chart, you'll be surprised to realize how price tends to respect those levels when it's going about its fluctuations. Now, if we take a look at this chart here with GJ, split up into 100 pip ranges, let's take a look at the areas in which price has respected support and resistance. So starting from down here, we have support right on this area on the 157 level. Going to the 158, you have support over here, and price comes back to this level right over here. Then we get to the 160 level, where price has shown not only resistance in the past, but actual support after it broke through from this level. And then we get to another level. We get to that 161 area, and so on and so forth. Now, this is just to show you how powerful these levels really are. They become very, very significant. And I bet if you are more aware of the levels at which you drew your support and resistances at, you would realize it's probably around these levels, whether that be the 100 pip levels or the quarter point levels. Those whole number levels usually are of significance, and you can try to get into the details to decipher why. If you really think about it, banks as well as other retail traders, when they're trading, it's very typical that if I want a TP, I'd like to set my TP at 162 or 163 or 164. If I want a stop loss, I'd like to set my stop loss at 159 or 158 or 157. Now, this may not be all the time, but the point is, psychologically, we all like whole numbers. And believe it or not, that is going to affect how we trade. So if I have a whole bunch of TPs at 160, or I have a whole bunch of stop losses at 159, what that's going to look like on a chart is a significant cutoff point or support or resistance, because certain orders are being closed and executed at those levels. Now, you can also see this in other pairs as well. Let's take a look at EU. On EU over here, we also have separated this in 100 pip ranges, as you can see. So we have a 1.05, 1.06, 1.07, 1.08, 1.09, and 1.10. And if we take a look at how these levels became significant support and resistance, you should be surprised if you never knew about this, right? So when you are drawing support and resistance, this may be a good idea. Instead of just seeking it out on the chart, try to actually add your levels first. And let's see what areas price seems to be respecting, and if they become very significant for you, instead of having to seek them out all the time. Now, when it comes to psychological levels or even quarter levels, it's very important that it's used as a type of confluence to add to other confluences. where it can be good. You can use psychological levels to trade, and maybe that's the only thing you trade, but it also has a lot of success when used with total market structure. So be sure you understand market structure, and when you understand market structure, then you understand how to go from one psychological level to another, and even be able to stack your orders in between the smaller levels as well. So for example, on this down move, as I got from this level to this level and came back for a retest, I could have took an entry right over here for the sell. And for the sell, as price comes down to this level and then comes back to retest, I could enter my trade assuming that it's going to retest the level right above it and stack my orders. Price comes down, comes back to that level, and again, I stack my orders and ride this trade all the way down. Many ways to use psychological levels, but again, market structure is always key, it's always king. You combine it with this and you have a great strategy on your hands. All right, so guys, give psychological levels a try. It is very powerful. Be aware of where those areas of support and resistance are. And after getting used to this and starting to master it, then you'll be able to hold your trades a little longer, or at least find multiple entries for your trades, because you'll know that usually price is gonna go from one psychological level to another. All right, so I hope you gained value in this video. Please do like, share, and subscribe. And until next time, Jordan the Maestro, peace.